Hey everyone, what is the best asset class to be trading right now? Why does no one listen to Jerome Powell, to what he says? In spite of being hawkish, people would just brush it off. And what does the future hold? And how do you trade this very changeable market? I'm going to let you in. I'm going to give you the answers to how I believe this market should be traded to get the maximum profit from it. These are my opinions, and this is the way I'm doing. And for better or worse, I'm going to keep doing it because it seems to work. But first, hang on. The best assets, the best stocks to be trading right now are the Magnificent Seven: Apple, Amazon, Alphabet, Microsoft, Meta, Tesla, and Nvidia are the wonderful seven. Now, I'm trading the QQQ and specifically the triple QQQ, which triples the QQQ, which is the 100 largest stocks on the NASDAQ. It's an ETF. The TQQQ triples the triple Q. So you get $3 for each dollar that the QQQ goes up. And it's been successful. Early in the week, bonds have been affecting the stock market hugely. The bonds usually have a strong influence anyway, but it's especially so. The federal government is the main inflator. They are the main cause of all this inflation. It happened when they put trillions of dollars and just printed money out of the air, essentially. But now they're continuing to inflate it by the spending. And the spending is driven by our support of two wars. I fully support our defending democracy, helping the righteous and true-hearted winning and preserving some sanity in this world. I'm fully supportive of that. But we have to realize that that's what Jerome Powell is fighting. He's trying to fight inflation, and the federal government is spending huge amounts of money. And that national cumulative debt of 34 trillion is starting to come home to roost. The chickens are coming home to roost, and it's coming home in the form of they have auctions for bonds. They had an auction on the 10-year bonds, and the interest rate went down because a lot of people and companies were buying the 10-year bond. They want to get that interest rate and lock it in before it disappears. There's some thought that Powell's going to somehow cut rates at some point, which it's not going to happen simply because the federal government keeps having these auctions where they have to have the bonds sell. And to get the bonds to sell, they got to increase the interest rates. And that's so when the interest rates went down on Tuesday because people were buying the 10-year bond, it was a different story on Thursday. It was the 30-year bond, and they were having trouble selling it, and they had to raise the interest rate. I think the idea that interest rates are going down anytime soon is just such a fallacy. We're in for 6 months or more of just the same interest rates. I don't think he's going to raise it unless he absolutely has to, because he's so fearful and afraid of breaking things. He sort of feels like he's walking on eggs. He could hit a landmine and things could explode any second. And things are probably exploding in a minor way in the background, which really has him on edge. But in all this change, it changes day by day, but I think the trend is up. And we got Christmas is coming, Santa Claus is coming, man. We got the Christmas holiday sprint with stocks going up. That's likely to happen. And it's going to go up because the stock market wants to go up. That is the main reason. It really defies logic that it is going up. But the stock market can stay irrational longer than you can remain solvent. And so you always want to go with the trend. And I'm going with the trend by trading the QQQ, and I'm trading specifically the TQQQ. And I don't really want to own an individual stock. This economy is driven totally by the Federal Reserve and the macroeconomic news because we've got two major wars going on. And that's what drives things and affects things. And that's what to pay attention to. And it changes like that in the snap of a finger. You have to be right on it. Trading the TQQQ, I don't recommend it. I can't recommend it because it's dangerous. Okay. But there is this danger that I could make a lot of money. I could also lose a lot of money. but I'm used to doing it, so it's not a problem. The main reasons I'm bullish on the market is because of interest rates and oil. Interest rates have come down after all this confusion. They were nearing 5% early in the week, but they ended the week, the 10-year bond ended at 4.61%, which is lower than it was. So that's a good reason to be bullish. Another good reason is oil. Oil is coming down, and it will show even better statistics in December, I think. And that's because it's down in the 70s. This is major because it affects the prices of literally everything. So I think inflation is coming down. I think the next inflation report on November 14th won't be that bad, and it might even be positive. I think it's going to be somewhat less than what's expected. So I expect that to propel stocks, and the continued lower oil price eventually will drive inflation down. I think those are big drivers, but a big driver is the federal spending on defense and supporting two sides in the war. I think these wars have a massive effect. It's massive federal spending, and we've got that $34 trillion debt that's going to keep interest rates higher for longer. This reminds me so much of the 1980s. I made good money in the 1980s in the stock market, and I was starting out, and that's from the early 80s on is where I made a lot of money, which was very profitable at the time. And so I think these conditions of having higher inflation and yet the stock market keeps going up, it is so reminiscent of the 1980s, and it just proves that prices can continue to go up on stocks even though you have inflation, and that's if you have a strong economy. And the government is more or less guaranteeing a strong economy. This is so strong that I don't think Powell wants to raise interest rates if he can help it, because he's fearful of breaking things and things coming apart, but I think he's going to leave them high for a long time. I'm going to have a portion of my portfolio that's just drawing interest, and then on the other side, I'm going to be super bullish by going with Tqqq, which is just having a wonderful performance. And taking a quick look at the chart on Tqqq, you can see what a wonderful investment it has been. It's made 124% since the beginning of this year. You can see it's had rocky times. This isn't something that you can just put money in and let it float. You've got to be on this minute by minute. I'm on it typically second by second. A more conservative approach, and probably for most people that can't devote all their time to trading, you're ahead to go with Tqqq as a more solid investment for the long term. Eventually, you will come out okay on it, is my belief. And I believe you'll have major growth. But the Tqqq, you make triple going up, but you also lose triple going down. And that's why I feel a person has to be on it every minute. Contrary to what you're being told by many YouTubers, I think it should be acknowledged that absolutely nobody has any idea where this market is going. And that is why I'm doing day trading. It's not forecastable. It's strongly reactive to whatever headline seems to be hitting the networks at the moment. And that's what I pay attention to, because that is what is driving the market. That, the price of oil, interest rates, and what Jerome Powell happens to be saying, plus the earnings that keep coming. And we got one more major earning coming, and that's with NVIDIA, which doesn't come out until towards the end of November, but that'll be a huge event. Two dates to keep in mind: November 14th, we get the CPI, and that's going to move the market one way or the other. Also, on December 13th, we get the Fed's decision about what they're going to do with interest rates. I view it as their last opportunity to really raise rates. They're going to leave rates the way they are now for a long time, but they might actually increase it on December 13th, especially if the stock market takes off wildly like it has been lately. I'm going to play this, the Tqqq. I should probably call this the Triple Q channel, because I love to play the Qs going down and going up, but I'm not going to play it going down unless the VIX is over 20. The VIX right now is below 15. When it's below 15, you have a raging bull market. It's like 14.17. Conditions are good, but I'm going to play it day by day. It's like Alcoholics Anonymous says, take it day by day. Well, this market I'm taking second by second. second. And that's the way I'm watching it. I think I can make a lot of money doing this because I'm used to doing this. This is not financial advice. This is the way I roll. Thank you for listening. Be sure to come back and see how this all pans out. Thank you.